We apologize for this brief interruption in the show. As many of you likely know, the Higher Standard podcast is officially sponsored by Transcend Company. Transcend has been my longtime provider for both testosterone and peptide therapies, but they offer so much more. Whether you're interested in health, wellness, or longevity, it all begins with you getting your blood work done. A lab draw will help you get the numbers and establish your baseline. You can go to transcendcompany.com/THSP. That's transcendcompany.com/THSP. Or you can click the link in the show notes on any streaming platform and on YouTube. Fill out your information and one of the representatives will contact you to get your journey started today. Now back to the show.
That's why. That's the justification.
It's got spiritual energy.
Hold on. You can't be making fun of that stuff because you're all about it.
No, I'm not.
If you weren't about it, you would have tossed it already.
Toss what?
The crystals.
No. Look, she's happy. I'm happy.
That's what I'm saying. You're about it.
I'm not about it. Dude, there's like a whole, it's not just the crystals. It's like you got to keep the window open so the sun hits the crystals.
Come on.
Then it's like, oh yeah, there's like this whole vibe thing. There's incense everywhere. I'm basically in a hippie house now.
I'm down with the incense. That's good.
I'm not though. It always smells like kind of like weed adjacent.
Oh, yeah.
Like I'm not.
If people walking by, they might get a little confused.
I don't smoke marijuana. I've tried it like twice in my life and never really was a fan, but I know what it smells like.
You didn't inhale though, right?
No, I inhaled. It was terrible. I got hungry. Why do I want to do that?
No.
I'm trying to get the opposite effect.
Not fun.
Why offset the trizepatide?
Exactly.
Yeah. I'm just saying.
Welcome back to the show, everyone. Whether you're a first-time home buyer looking to make an upgrade or you're simply curious about the real estate market, today we're going to talk about home affordability.
That was bad. That was choke. You choked hard.
In today's episode, we're going to break down the 28-36 rule, the 50-30-20 rule, and we're going to also get into how to calculate what you and your family can afford based on your income.
Or your affordability.
Your affordability. So, Chris, we actually know this, and we've talked about it on the show. We're not going to paint all real estate agents and brokers out to be villains.
You went off script already?
But no, this is this portion of the script. Unfortunately, people that don't know what they're doing, they usually get referred to real estate agents and brokers for advice on whether it's the right time to buy or not. Yep. And you and I both know what answer they get most of the time.
The best time to buy is now. It's always the right time to buy. As long as you can afford the payment, you should buy right now. Buy now.
Right. Exactly.
It is the mantra of most people in the real estate profession. And this is really, frankly, part of the macro problem with the real estate business. Real estate professionals typically get paid a commission on the higher loan amount or the higher sale price of a home. So in their mind, as values go up, you marry the home and you date the rate, right? So you're only temporarily dealing with the rate. And as rates go up and down, you change, you get lower rates. That's all well and good in a market that might be a little elevated or might have a little bit higher rates than normal. But when you got the average home price in the country at an all-time high of $434,000, and you got mortgage rates above 7% on average, and you are at all-time unaffordability, all time, not just like the last couple of years, not the last decade, all time in history ever. Okay, that mantra of it's always a good time to buy, it kind of is a little tone deaf,
right?
And I think we're seeing the pivot in the markets right now. Because the consumer is going, you know what? No, it's not a good time for me to buy. I can't afford it. This doesn't make any economic sense to me anymore. Right. And you're seeing the sales activity drop to some of the lowest numbers you've seen in 20 or 30 years in some cases.
Yeah, and we're definitely going to get into that at the tail end of the show. But first, what we want to get into is how can you calculate what you can actually afford? Because I think a key distinction here that a lot of people fail to recognize, especially if it's their first time or they don't have somebody that can mentor them through this process, is that what you can afford is completely different than what you actually qualify for, right?
Yeah, and I will say there is a bit of a realism element to this that I think is lost on people. Just because you go through the analytics that we're going to walk you through does not in and of itself mean that if you don't feel comfortable with that payment, you shouldn't do it. You'd be surprised how much home you can actually qualify for because of the way the qualification metrics work. They take a percentage of your income before and after overall expenses to look at how much you qualify for. And these metrics are rough estimates of what you should and shouldn't be paying in total cost for housing to you. But these rough estimates, they don't necessarily mean that you're going to feel comfortable with how much you are or are not paying, right? So if I come back and I say, you know what, Chris, I can afford a house payment, and it's always payment driven. It's not really off of you back into the dollar amount of the home that you want to buy. It's payment driven, right? It's cash flow driven. We've always talked on the show about cash flow, and we'll walk into what a real life example of this looks like. But if you say, hey, I can't pay $10,000 a month for a mortgage payment, that's insane. I would only have $6,000 left, but you're telling me I qualify. That means you don't feel comfortable. That means you shouldn't buy the home, which means whether you qualify or not is irrelevant. You are the best gauge of whether or not that number makes sense to you. So to keep that in the back of your head as we go through this exercise.
Right. So one of the first rules that you'll find that's very common that people like to, suggest for you to follow, and it's a little gimmicky, right? Is the 50-30-20 rule. Okay.
Yeah.
So we'll start there. Typically what they're saying is, 50% of your gross monthly income, that means everything before taxes, okay, gets paid towards, like, your bills and your mortgage payment and things of that nature, right?
Yep.
Next is you got 30% that goes towards some of your wants, things that you want to buy, things that you want to spend money on, and 20% towards savings. Now, these are just rough estimates. People don't typically follow these estimates, and it swings in and out. But you should. It should be somewhat in line.
That's an ideal world. And let's be honest, we're not living in an ideal world.
Right.
With inflation taking cost of things 20-30% up in the matter of a couple of years, and everything around us costing more, even as inflation slows, it's still going upward. You haven't seen any deflationary trends. For most Americans, that 20% ain't there. They're not saving. They don't have enough money to save. So you're seeing 50, 60, 70% towards the needs.
Yes.
And you're seeing maybe 20 or 30% left over for the wants in a best case scenario, and then zero left for the savings. In some places, in some people's cases, they're actually running cash flow negative, running up those credit card balances.
Right.
Right. And what do? They go to buy now, pay later services. So in that case, you're actually running at a cash flow negative because you're spending more than you make, and your needs are frankly causing you to go in debt.
Right. So, and also, part of that 30% of, your wants, that's also in the savings, it's paying down some of your debt. So if you can't save, hurry up and get to the point where you can save, pay off your high interest credit card debt, and get to the point where you can start saving, right? But now we're going to get into the 28-36 rule. This is typically what, underwriters will begin to look at. It's known as the front end back end ratio, right?
Mm-hmm.
So the 28-36 rule, 28 represents 28% of your gross monthly income should be going towards your principal, interest, taxes, and insurance, right? So your mortgage payment, essentially, right?
Yeah.
And then the 36% rule is it also includes your housing needs of your principal, interest, taxes, insurance, and also all your credit card debts, your student loan debts, and your auto loan debts, and the rest. It's I think it's really interesting though that they do all this using gross income and it's before taxes,
Mm-hmm.
right?
I think the reason why originally is that taxes can vary a great deal state to state.
Mm-hmm.
So when you consider federal taxes, I guess it would probably be a more uniform way to do this. It would be a little more conservative. They just never did. So it is a gross number. So if you take your gross salary, let's say you make, $100,000 a year, multiply it times 28%,
Right.
$28,000 a year, divide by 12 because there's 12 months in the year. That's what your mortgage payment, that's how much mortgage payment you should be paying on the front end. Now you might be saying, Chris, why do I have a front end and a back end ratio? Why do I need both? Because they want to know how much you have in debt, right? Because let's say you have a great front end ratio and you have tons of money and you can afford a property with a mortgage payment of $4,000 a month because you make tons of money, right? Well, if you got tons of debt and your back end ratio is above 36%, guess what? You don't make enough money to cover that mortgage payment on the front end and your existing debt, so you were considered a higher risk. So they're not going to give you a loan if your ratios are out of whack.
Right, and exactly. In the way they use the 28 front end ratio portion of that is the way they can also pre-screen the transaction, right? So if you come in, you're saying you want to apply for a home loan and you make X amount of dollars, but you don't even, if it's way above 28%, that the mortgage payment is more than 28% of your gross monthly income, they go, look, you're not going to qualify for that, so we can't even pre-qualify you. So let's not even go ahead and run your credit. Let's just save you the hassle, right?
Yeah, and they can also, if you know off the top of your head what you pay every single month from a credit perspective, even if they don't pull your credit report, and 9 times out of 10 they do that these days in the front end anyway, then they're going to go, okay, this is how much you're paying every single month. This is what your car payment is, your student loan payment. This is what your credit card balances are kind of like. You're paying every single month. What's your minimum payments? Okay, great, it's this. They're going to figure out a rough estimate of what your back end is. And they're going to go, okay, this person's going to qualify, not going to qualify. What you might have come to from a conclusion perspective is for most of America, the back end ratio is the problem.
Yeah, the back end ratio is definitely the problem. And here's the thing, unfortunately for most people, a lot of times they're not going to stop you at the initial 28%. They're going to want to let's find a way to make this work, right?
Mm-hmm.
So like we said earlier, what you actually can afford is not the same for what you qualify. So you'll actually be able to qualify for much more, but this is to where, if you stick to that 28% of your gross monthly income going towards your PITI, your mortgage payment, right? That you can still live, I guess, somewhat comfortably if everything else is managed properly, right? So I think now we should get into some examples so people can understand really what we're talking about here, and it'll bleed right into the show with the home affordability issues that we're seeing and how bad it's really gotten.
And I have a lot on this topic. It's of huge personal interest to me because I do think that it is the one thing we're not talking about enough and we're not raising enough awareness of, not only us, as a show and as a podcast, but certainly us as a society and the traditional media. We're just not focused on enough of the implications this has on people. And if you're listening to this 28%, 36% rule and you're going, wait a minute, if I make $100,000 per year and I take 28% of that on the front end, and that's how much I should afford towards principal, interest, taxes, and insurance.
$2,333.
$2,333. What home can you buy in America?
I'm going to get to that, and that's the one that I think is going to blow people away. So let's not take the rabbit out of the hat yet. Yeah. But Haroon, if you could do me a favor, please, can you Google mortgage calculator bank rate? This is what I use to come up with these figures in case anybody wanted to fact check us or go through the motions themselves. These are some of the assumptions that were made to come to these figures. We assume that people applying would be getting a 30-year loan.
Mm-hmm.
Okay, right now the average 30-year fixed mortgage rate is approximately 7%. Chris and I believe that it's probably going to go up from there. So, but for right now, it's at 7%. I only estimated a 10% down payment. So that also means you're probably going to have some PMI, right? Private mortgage insurance, which we'll get into. For property taxes, I estimated 1.25% of the home value. Okay, on average, it varies from state to state.
Yeah, if you're in Texas, you probably want to use something closer to 1.75, depending on what municipality you're in, stuff like that. But
yeah, and then other states might be lower, but this is somewhere like right in the middle, right? And then for home insurance, I average 0.7% of the home price. Okay, so this is what we got now. So for somebody that's making $60,000 a year, okay, slightly below the average income across the U.S. Okay, so what you would do there is you would divide that by 12 to figure out your gross monthly income. That comes out to $5,000. Okay, you take that figure and you times it by 28%. That leaves you with a mortgage payment of $1,400. Okay, what that means for somebody right now is that you would be able to afford, with a 7% mortgage rate, a home of $175,000.
The average home in the United States is currently at $434,000. Keep the average home.
The average home. So keep that in mind as we go through the rest of these examples.
Yeah.
Okay. Now, if that same person that was making $60,000 was looking for a home at a time when mortgage rates were at, let's just say, 5%, they're now looking at a home that they can afford at $210,000.
Again, half of the average across the country. I keep harping on this because it's so compelling to me how unaffordable things are with honestly good old school traditional salaries. And it highlights one important thing we've talked about a lot on the show. Wages have not kept up with inflation, and that does include home inflation.
Yeah, absolutely. So next up on this is somebody making $70,000 a year. You take that gross monthly income of $5,800, essentially, right? That comes out to a mortgage payment that they can afford at $1,633. At a 7% mortgage rate, they can afford a home at $214,000.
Again, this also assumes you have the money to put down and you have savings to put down the mortgage payment as well.
Right. So, like I said, this is all assuming a 10% down payment, right? And I left a little bit of wiggle room for PMI. That's going to be based on their lender.
No, and I get you, but so there's so many hurdles here for the average American to buy their first home. Saving the money. At the top of the show, we talked 50, 30, 20. That's an ideal situation. Mm-hmm. Most people aren't saving the money. And even if you do save money, to put a down payment of 10% down on a $200,000 home, that's $20,000.
Yeah,
That's a lot of money.
Yeah, and hopefully, you've already paid off the credit card debt in order to get that, right?
Yeah.
So, but for the individual that is making $70,000 a year, if they were looking to buy a home and mortgage rates were at 5%, they're looking at a home at $252,000. Okay, that's an increase of $40,000. So you're looking at it like, man, like this is why mortgage rates matter to people, right? But still well below the average home price across the nation. Next up, $80,000. Now we're talking somebody making more than the average income, for somebody making money across the nation. We're looking at a mortgage payment of $1,866 at a 7% mortgage rate. They can afford a home at $245,000. What does that tell you? The average income earner, more income than the average income earner across the nation can't afford an average home.
By $200,000.
By $200,000, double, right? Insane, man. With a 5% mortgage rate, they could afford a home for $275,000.
Yeah, these numbers are sad. You're trying to make everybody sad.
No, but this is what we're talking about. I don't think people understand unless they've actually gone through this process. We keep preaching home affordability is an issue. It's a real issue.
Arun, are you sad too?
Yeah.
Yeah, we're all sad now. Thank you.
Debbie Downer Saied.
Yeah,
Debbie
just
but
totally ruin everybody's buzz.
No, but there's some good news coming after this, right?
I hope
We
so.
just had some bomb Mexican food.
I mean, yeah, we were having a bonding moment outside.
Some burritos, right?
Yeah, it was Burrito Tuesday.
All right, so for the income earner that's making $100,000 a year,
This is not the good news.
this is not the good news.
God damn it.
We tell people all the time on the show, you should be striving to make $100,000 a year.
Six figures should be the goal for everybody.
Right?
In today's world, and as sad as it sounds to be that delineated on a dollar amount, and I know we should all chase passions and do things we're happy with, you really need to make six figures.
Yeah, exactly.
You need to do that.
And if you don't have enough money to invest in the stock market, like we've talked about on previous episodes, and you're lucky enough to pay off all your student loan debt and your credit card debt, and you want to invest in something, invest in yourself. Take on some extra courses, do what else you need to do, maybe pick up a side hustle, right? Like make some extra money. I mean, it doesn't all need to come from the same place.
Get your real estate license.
Get your real estate license.
You can't say that, dude. You
This
can't
guy-
even echo that.
This guy, how many times he doesn't have his real estate license yet?
Yeah, neither do you.
Okay.
Yeah, you don't. You don't ever follow through with
For
your promises to me.
For somebody that makes $100,000 a year, they would be able to afford a mortgage payment of $2,333 based on the 28% rule. At a 7% mortgage rate, you can afford approximately $305,000.
Wow. Can you get to the average anytime soon?
The average? No. We stopped right there.
Is that where we're stopping?
That's where we're stopping.
Yeah, you are.
Because I feel like when I was doing my research for the show and I'm looking at some of the people that are making these videos, I'm like, this is kind of obnoxious. You're not even talking to the masses anymore.
So you're basically saying, as you write these down, your scenarios, you're like, okay, how can I end this in the most depressing note ever?
No, man. Because you have to be thoughtful when you're going about this. Because I also went down the rabbit hole of thinking there's a lot of hidden costs in owning a home too.
Lots.
That people, unless
repair and maintenance, man.
Repair and maintenance, we talk about all the time. Landscaping, that takes a huge chunk of your money.
Yeah. Point of fact, I can't afford a yard.
Yeah, but you also have HOA. I don't.
Yeah, I pay, and I don't.
Because there's a lot of landscaping around your area. How much is your HOA?
I have two.
Okay, better. Thank you.
Why is that better?
That proves my point better.
I'm getting extorted, and I don't have the benefits that you have.
That's not true. The landscaping around your house is beautiful.
I have concrete in front of my house.
That's not true.
I have concrete behind my house. What landscaping?
Where does Carter have all his birthdays?
At the park, which is filled with Chinese elms, which I happen to be allergic to. It's killing me.
The park.
The HOA is literally killing me.
That is funded by your HOA.
That is killing me.
So how much is your HOA?
I think for the sub-association, it's $190 a month.
So something to keep in mind, too. If you are looking to buy a home and the property you're looking at does have an HOA, this is an expense you want to factor into this 28% figure, right? This is part of your housing needs.
Yeah, and if you go to Zillow, Redfin, anything else, and you're looking at a property, they usually list the HOA there. So it should be a pretty attainable number for you.
Right. So my landscaping is actually $160. So less than your
landscaping, fancy.
Less than your HOA. They also provides you a pool, a home gym, not a home gym, but a rec gym. Right? Come on.
You ever been to the general population in a prison before?
No.
You want to go to general
No,
population?
I hope
prison?
not. I hope this show doesn't land me there.
You think you know what it's like, right? Because you've seen the movies.
I feel like I'd survive.
You feel like you would survive, but you don't want to go there to figure it out, right?
No, it's like something that I don't want to test out.
That's basically what an HOA gym is like.
Stop.
Yeah.
I feel like they don't get used. I mean, is it nearby your house? Do you see
You
it?
also
do you see it
said
full?
you felt like you could survive in the yard.
I could survive.
So clearly your perspective on this is a little off.
No, let's
Okay.
come on, man.
What gang would you bang in?
All of them. Look, I got the pale skin.
You're not Latino. Right out the gate.
Oh, I get confused for that all the time.
There's not like a Southeast Asian gang. I mean, what are you going to do?
No, I mean, I'd probably have to group up with the Latinos.
You don't speak Spanish, dude.
What do you mean?
You don't speak. If you're going to be Latino, you have to,
I'm
this
gonna
is
learn.
prison rules here, man.
What was that movie with Will Ferrell, Kevin Hart?
Get hard.
Get hard, yeah.
I live by that motto. It's a fantastic documentary.
Yeah.
I was so sad when I found out that it was fiction.
Yeah. Oh, man. But yeah, so home affordability is a real issue. Real issue. And Chris has a lot of data on this episode that
Why'd you laugh before you said it?
because
That's
you're
hurtful,
making me
dude.
feel like
That's
I'm the
hurtful.
villain here.
No, Arun, I did not make him say any of that negative comment, did I?
No.
What negative
Right.
comment?
Bro, all your notes and stuff just came out negative.
You just pooped on everybody's salaries.
Well, this is not my fault. This is Jerome Powell's fault. Why is this my fault?
You got all high and mighty on everybody's salaries.
I did not get
And then you're talking about your landscaper? Bro, you don't even have a house. You're talking about a landscaper. Talk about insensitive.
Chris, I'm not even talking about you, man. You're well above this.
Bro, take the pulse of the room here.
Poor guys.
I'm
out
so
there.
tone deaf.
Who's poor guy? This guy's poor guy?
No, just the people that like finally hit the 6-figure income.
And you're
They're
like,
hey, I
oh,
just
my
made it."
landscaper, my $1 million house.
Saied's over here like,
No,
hey,
I'm just
you
saying.
suck.
I'm just
Yeah.
saying, like, this is what they're talking about when they talk about a nation of renters, right? This is the issue.
Which you are not.
No, neither are you, and neither is he. Hey, hold on. When I ran this idea by you earlier today, you were all for it. Like, great, sold.
I
Let's do
was.
it.
I just didn't realize you'd be like pooping on all the listeners.
Well, so what can we do to help people get out of this?
We can educate you with financial literacy from the great part of the news that came out recently so you'll feel better about what's going on in the economy.
That's what I tried to do. See, there's great news coming out. There you go.
All right, Arun, let's jump into it. Before we do, though, welcome back to the #1 financial literacy podcast in the world. Sitting next to see, you're
Oh, you're not even reading.
You're not.
You're not even reading.
So, is that what goes on in your head?
I was thinking about affordability.
Affordability.
Yeah. Sitting next to me, my really sad and depressing partner in time, the one and only Saied Omar.
Thank you, my man. Sitting next to me on my left is my partner in crime, Chris Nahibi. Welcome back to the show, everybody.
And behind the ones and twos, the man in all black everything, DJ Haroon.
Hello, everyone.
Chipper. You should try that sometime.
He's so excited about his segment later.
Oh, it's good. I'm looking forward to it. I don't really understand it, but we're going to get there. All right. So June is Men's Health Month. Okay. So we thought this would be a great opportunity to tell you that we are sponsored by the one and only Transcend Company. And if you go to transcendcompany.com/THSP, you can sign up to have some of their representatives contact you to help you get all of your longevity, health, fitness goals met. The first step comes from you taking the initiative to do so. And look, I didn't jump on right away before I was a client, which I am. And I'm on a lot of stuff now. I am chemically enhanced.
You are chemically enhanced, but talk about some of the benefits that you've seen. I mean, look, currently with what's going on in the financial markets, I wouldn't say that this is not a stressful time. So to even be feeling some of the benefits of some of the things that you're taking, I mean, let's get into that.
Do you even know all the stuff that I'm taking?
I know.
It's a list. I got to get it out now.
Yeah.
I'll tell you the list. So I will tell you right out the gate, I never thought in a million years that I would be this guy, but I'm going to go ahead and say it, right?
All right.
I'm on testosterone. I have TRT. I had low testosterone, so I'm not saying that. I'm not suggesting people go on that unless you have a physiological need for it. But fantastic. SS31. I went from MOTS-C to SS31. Think of SS31 as a nootropic and as better energy production at a cellular level, ATP process, the whole thing.
But I think something that's worth diving into for the listeners that maybe want to explore, maybe they've done their blood panel and they're monitoring it and they're saying, okay, maybe the testosterone route is something I want to go down, right? Talk about like how helpful the team was in helping you figure out the right dosage, because I know that maybe the dosage change, or they split it up and they figured out a way to really maximize what you were trying to accomplish?
Well, it was very tailored for me. So I originally started off really apprehensive about the idea of taking anything, particularly an injection. It scared the hell out of me. And then I was like, okay, well, let me read about some of the benefits. And it's like, okay, with testosterone replacement therapy, I was constantly exhausted. I wasn't exhausted anymore afterward. I frankly had this weird sensation the first night I took the shot. And I called the doctor the next day and I was like, hey, like I had this sensation. And he was like, yeah, that's dopamine and serotonin and all the happy stuff, the chemicals that make you happy, literally flooding to your brain. And the light bulb went on for me that so much of the way you feel, as much as you think a feeling is a mental thing that comes from your brain, it is chemical, it's biological. So much of our hormones play so huge of an impact in how tired you are, how you rest, how you feel, what your temperament is. And when I originally started, I took injections of 150 milligrams once a week, and then I split it up into 75 milligrams twice a week, and then we just monitored the blood constantly every month, essentially, for the first 6 months to a year. And then now I'm on a quarterly kind of monitoring cycle. But the idea is that I have the normal, healthy blood panel of a 20-year-old, basically.
Wow.
And I regret having waited as long as I did. That being said, we're sponsored by them. If you ever wanted to think about those kind of things, there's certainly the path you should go down is Transcend. But I also do skincare. My wife does skincare. GHK-CU is a cream and a pill that I take now for just skin. It has been amazing for my skin. I know that my skin looks terrible, but compared to what it looked like before, it's a lot better now. I'm on IGF-1, which is essentially growth hormone stimulating chemical, not to really put my levels up super high, but to give me like enough to where I'm, again, that 20-year-old range, and it's been fantastic. I feel like I can work out like I did when I was younger and have the same physiological response you have when you're in your 20s and 30s now in my 40s.
That's incredible, man.
Yeah, and it's weird. You lose sight of how motivating it was to see change as quickly as you did when you were younger.
Yeah.
Yeah, so it's been incredible. But it's Men's Health Month. Frankly, they also do females too. That my wife she has a rep by first name and personal mobile phone basis.
Personal mobile?
It's ridiculous. They're constantly chatting about
That's
stuff.
because their team there is so good.
Yeah, so good. Shout out to Anna and Cassie and all them. All right, we have the inflation summary coming up. We're going to talk a little bit about where that's at and what that means for you. We're going to talk a little bit about the new single-family house for sale has surged. And what that really means for the macro picture of housing. Our good old friend Mohamed A is back. U.S. housing market is finally starting to see listings rise. So again, you're going to see a lot of housing impacts here. Lance Lambert, one of my favorite housing economists, housing affordability is the story. And then lastly, we'll talk about job openings falling to the lowest level since February of 2021, a late edition, but very, very valuable. I think that was today, right?
Yeah.
Yeah.
And if you're listening to this on Apple or Spotify, please head over, leave us an honest 5-star review. We would greatly appreciate it. It does a lot for the show. If you're watching us over on YouTube, please make sure you subscribe, hit that like button, ring that notification bell. Let's get this episode out to as many people as possible. Do all the moist, goody good sassafras.
Haroon, you trying to show me that it's Men's Health Month? Is that what you're doing here? Nope.
No, I was trying to slide that in.
Oh, I like it when you try to slide stuff in.
I know. I wasn't smooth about it, though. Very bumpy.
There's some
Yeah, very
conspiracy
aggressive.
theories about that article. We'll
What
get into it later.
Oh, yeah. I had a lot of questions. I haven't heard any conspiracy
Yeah,
theories.
we haven't talked about it yet. But we'll
Okay,
get into it.
all right. From the Kobeissi Letter, the number of new single-family homes for sale has surged to 480,000 in April, the highest since 2008's financial crisis. So let's set the tone, okay? April PCE inflation, the Fed's preferred inflation measure, was 2.7%, in line with expectations of 2.7%. So inflation is where we thought it would be.
And PCE is the inflation report that the Fed likes to look at. They prefer it over the CPI.
Yes, they do. And core PCE inflation was 2.8%. Again, in line with expectations of 2.8%.
Good.
So by all outward measures, we are heading the direction we thought we would. That should be good, right?
No, wrong.
See, this is why your negativity tone of the show is noted, okay?
Okay.
You're Debbie Downer. Both headline and core PCE inflation were unchanged last month. Okay. If we're in line, but it's not changed, we've flatlined. But yet they anticipated this to be the case, right? So the higher for longer question remains out there. Is the Fed going to hold rates higher for longer because inflation is not continually moving down and they expected it to be these numbers? It is these numbers. Does it mean they're right? Does that mean that's the right thing to do?
Right. So there's a Fed meeting coming up next week. I think
Bastards.
Yeah. So that's a key thing to note here. And look, higher for longer could still mean that they're still going to carry out what they said that they're going to do back in December and in March. It just means that the 3 rate cuts that they predicted are going to happen at a later point in the year. A lot of people had hoped for this June meeting. For sure, I think there was like a 75% chance that by now there would have been at least 1 rate cut.
Whoopsies.
Yeah, that was wrong. So if that's the case and there is no rate cut, which I think that's our prediction, right? I can only speak for myself.
Yeah, there's not going to be a rate cut in June.
Not going to be a rate cut in June. So if you just follow that metric right there, we're already in higher for longer territory, right?
Yep. And I'm going to go on record to say the Fed has already, as the kids say, fumbled the bag as it comes to economic policy. I think that they're anticipating hitting these numbers and then they start cutting. That is fundamentally incorrect. You're not going to slow the economy on a dime. You cut 25, 50, 75, even 100 basis points, a full 1%. You're not going to be able to stop what comes next.
Okay.
So unless you start cutting ahead of inflation hitting your target, you are going to go way past it. And when you do, recessionary territory, kids.
But the fear of cutting ahead of getting to your targets, right? And look, they said that they were open to that idea, that they would be willing to start cutting rates so long as we're on a downward trajectory, right? And it's coming down at a cadence fast enough to where they know that if they do cut, optimism doesn't creep back into the market, and now it starts to go up again and resurge like it did back in the 70s, right? So, but what we're seeing right now is they don't necessarily believe that. They think that there's still too much optimism out there in the markets.
There is. And, well, you heard that the highest surge in single-family homes for sale since the 2008 financial crisis. Well, this came after new home sales were down 7.7% year over year last month, the largest drop in 13 months. Excluding the 2008 through 2009 housing crisis, this is by far the largest supply of new homes in U.S. history.
So by new homes, this means literally brand new homes.
Yeah, new homes to the market.
Yeah.
Brand new built homes to the market.
Yeah.
Again, not all homes. Certainly there's more existing homes than there are new homes, but still a metric worth and notable to talk about.
Absolutely, yeah.
All right. Notably, the number of new homes on the market has more than tripled in 12 years. So there are more homes than ever being supplied to the market, frankly, in the last 12 years. You've seen this triple, 3 times as many. Meanwhile, the median price of a new home is at $433,500 and remains near record highs. Actually, shortly after this, it was announced that it was $434,000 and is at a record high.
If you listen to the top of the show, you know you got to be making as much as Chris just to afford that home.
I can't afford that home.
That's a lie.
New homes are becoming the only option for buyers. Some chart work pulled up by the sexy, handsome hands of Haroon. This chart shows you the new home supply in the U.S. rising to the highest level since the 2008 financial crisis. Again, this is not the only indicative thing that's happening in the market that is a warning sign flashing red, but certainly it is one of many factors out there that are concerning. If the new home supply is rising to that level it was before an economic crash, a housing recession, and that is happening again in a way that honestly, aesthetically looks like a sharper increase and has potential for a sharper decline afterward, that to me presents a corollary to a housing recession that cannot be ignored.
Right.
Which will be a resounding theme what we're going to talk about throughout the rest of the episode. So the train's going to leave Penetration Station, head straight to Pound Town now. Okay?
Bro, why is it okay for you to drop the negative news, but for me, I'm just, come on, man.
That wasn't negative news.
That wasn't negative news?
That was a euphemism.
Oh, really? For what?
The train leaving Pound Town and going straight to Penetration Station. Did I say that wrong?
No, Penetration Station to Pound Town is what you said.
Chris dropped the bad and negative news in a sentence. Yours was a whole 25-minute segment.
It was a 25-minute.
Yeah, it felt like an hour, though.
We really had to drive home the point that
you're not making enough money.
Yes, we got the point.
Yeah,
Haroon and I feel
need a side
very
hustle.
comfortable that
or you need to level up.
See, now you're just being derogatory.
Why?
You're just being mean, dude.
What's mean?
You got to level up, bro.
Yeah, you got to level up. You know what that means. You know what the kids say or what they mean when they say that.
So do you always
You gotta
watch
marry.
Andy?
You gotta marry up.
Okay. Do you always watch Andy Elliott reels in your spare time? Or
No, I can't stand that guy.
I think you like him.
No.
You sound like him.
I cannot.
So just Grant Cardone then. You draw the line
I
at
feel
Grant
like
Cardone?
you're cutting weight just so you can go to one of his seminars, so you can ask you to take off your shirt.
Let me tell you right now, the thought has crossed my mind of buying some super tight pants and a super tight shirt. And when he says, stand up, take your shirt off, I'm going to take it off and start rubbing my belly button. Hey there, Andy.
Hey, Andy.
I want you to know that I call my belly button Elliot.
Yeah.
And I'm inside of Elliot right now.
Oh, jeez.
All right, let's talk about the economy from the perspective of the ambassador of all things economists, the former man who headed PIMCO, Mohamed A.
Yeah, let's get into it.
He's basically a gangster.
I mean,
in the economy circles, if you see this man walk up on you, just walk the other way. Okay.
yeah. I mean, PIMCO is like, that's a big deal.
Name a better mustache in the business. I'll wait.
What was that guy's name? Oh, in the business?
Yeah, name another mustache.
Yeah,
that's
not a
better
lot
than
of
this.
guys in his position can be rocking mustaches. Like,
I
you
mean-
got to own that thing.
That's 1970s porn style right there. I mean, he's coming out hard.
Yeah.
Bloomberg on U.S. residential housing. Him quoting Bloomberg, of course. The U.S. housing market, long crippled by an investor drought, is finally starting to see listings rise. But now, in many places, the buyers just aren't showing up.
I mean, I think we got to reread that. You said investor drought. It's inventory drought.
Inventory. Sorry. Freudian slip.
That's a big difference, right? Because the inventory drought, if there is an inventory drought, then that would put upward pressure on prices.
Arun, is it just me or is he getting kind of all high and mighty today on his reading?
Oh, he's feeling groovy.
Yeah, he's feeling good.
Bro,
about
you're
himself.
you're not gonna call him out. I gotta be the only one to call him out. What are you doing back
Look,
there?
I was reading.
To mistake is... See, look, we're both reading. We're trying to do our jobs here, okay?
You read it? You read it as investor?
Oh, no, I wasn't reading what he was trying to read. I was reading something else. Tell me you don't watch the show.
Without telling me you don't watch the show. At least one of us will make it to Pound Town.
Yeah.
Sellers are grappling with the fact that higher for longer rates are choking off demand during what's typically the key season for the market. And more of those owners are cutting asking prices than any time since November of 2022 as inventory grows stale, according to Redfin Corp. When we love Redfin data. So, again, you're kind of seeing a commonality here of the market is starting to show cracks that people who have told you for a long time now, years, frankly, in some cases, that the market is going to have perpetual price increases, everything's going to go up. Well, that does not seem to be the case. As a matter of fact, you're seeing concerns here. And I will tell you on a personal level, I know a lot of people in real estate agent adjacent businesses like wholesaling. The party's over, man. They are not seeing the same cadence of deals they once saw.
Oh yeah, that's for sure. I mean, we talked about it before. 75% of lenders' transactions are refinances.
Yeah.
Right.
Typically.
So that party is definitely over. And something that after reading one of these comments right here, I just thought of is this guy right here, Gordon Miller, says, "What you've missed is not just the fact that rates haven't moved much in months, but affordability has weakened due to rising insurance and taxes."
You might not know this, but Gordon and I speak a lot.
Really, I didn't know that.
Yeah, Gordon and I speak a lot. He actually is going to come on the show.
No shit. I'll just give him his flowers.
Yeah. Gordon comments on fucking everybody on X, by the way.
Really?
He's- and every single economic person he's commenting.
And that's a really good point, and it got me thinking. So obviously, it's now industry norm, right, to have a pre-approval letter when you're out, shopping for a home. It's honestly gotten to the point where you should have your insurance in line too, right? Like, I mean, it should be one of the first things checked off because a lot of times during these transactions, it comes in later.
Yeah.
Right? Towards the tail end of the transaction. Obviously, you can't get an insurance quote until you figured out the house that you want to get. And, certain insurance companies don't want to, maybe provide coverage in a certain area because they're already, spread thin over there.
Fires, floods, all sorts of problems.
Yeah, a
in
lot of
certain
times you see companies say, like, oh, we're not doing any more in California. We're not doing any more in Florida, let's say, right? Because of, natural hazards. But it's becoming a real issue, man. I'm seeing personally myself on properties that are coming in 30% higher, 35% higher premiums, and that can really affect somebody's like cash flow position.
Yeah, no, it does, and it's a problem. There are so many problems with the housing market that people are just choosing to ignore or turn the blind eye to. I mean, the insurance problem is huge. You got obviously the housing affordability issues are huge. You've seen inventory changing in a very palpable way. You've got all sorts of recession indicators. Everyone's saying that the highest ever. How many times have you heard highest ever, highest in history? Never happened before with some of this economic data. And then you think to yourself from just like an outside looking in perspective, even if you're not a housing economist, you can go, if all these things are at the highest point ever, doesn't that usually mean like bubble?
Yeah.
Like, isn't that like a bubble gets to like the biggest point ever and then it bursts?
Right.
Like that's what happens. Like that's how bubbles burst.
Right.
Is you get to this really super high number and people go, oh shit, we it's too far. It's too far.
But I think this time around, what's going to need to happen is, lending standards, they're high right now. It's not like what it was back in 2008. Right?
That's true.
It's harder for people to qualify. They made it harder. Then you need to show the ability to repay, right? So what's going to be the catalyst, right? I feel like something else is going to have to fall first.
Yeah, but here's the problem this is the fallacy. This is the logical fallacy that really pisses me off, okay? So let's be clear about something. We keep looking to past recessions to say, hey, is this going to happen again? Oh my God, this looks like the 70s. This looks like the 80s. This looks like the Great Financial Crisis. This looks like the Great Depression. No housing recession, no recession ever, for that matter, has ever been started by a similar stimulus than another one.
Yeah, they're all snowflakes.
So why we keep looking backward to see what's happening in front of us is naive and nonsensical.
I'm not saying that I want to look back and figure out what it is, what's going to happen.
I know. But we're trying to find something that's going to be a catalyst for a fall.
Yeah, because look, at the end of the day, if people still have their jobs, and what was it? It was like 90% of homeowners have a mortgage rate of 6% or less, right? Was that it?
Mm-hmm.
90. Okay, so think about it. And how many of them have 3%, 4%? It's still very much affordable for them. They're not going to want to sell because they don't want to get into this market, right?
Yeah.
So unless people start losing their jobs, their companies go down, there's I don't know, values go down and people are underwater. If banks go down and they start calling on loans, like something like that is going to happen in order for people to have to begin listing their homes. Because back in 2008, in order for a sharp decline like that, I don't see a decline like that happening. But 2.9 million homes came online at one time.
I get it. And look, I don't want to be a naysayer, but I do think we're on the precipice of an economic cataclysm.
Yeah.
Call it what it is. I think it's going to be real. I think there's going to be pain in the economy. I don't see where AI is really helping companies at this point in time. I honestly see a lot of companies just outsourcing to the Philippines. I see a lot of companies outsourcing to other countries still. So where is the AI efficiency happening? And I don't think AI is going to take people's jobs. I think people who know how to use AI better than somebody else are going to take somebody's job.
That's right. We were talking about that. Yep.
So again, I don't see that happening. Let's go on to Lance Lambert here, another housing economist that I respect immensely, and I think he's got a lot of insightful stuff here. I think he's got some more data, which I like to call very Saied relevant. It's very negative. Housing affordability is the story. The fastest deterioration. Yeah. Deterioration.
You got it. Nailed it.
I feel like I put the extra R's in there. Or rah.
We don't like the R's.
Yeah. Fastest deterioration ever, 2021 to 2023. If U.S. income spiked 69%, okay, we'd return to pre-pandemic housing affordability. Income would have to go up 69% to get the same affordability you saw pre-pandemic.
So what's wrong with Lance? Why do you have to stick to 69? You could have rounded that shit up.
Nope.
Could have rounded down. He had to stick to that.
Just being factual.
He knows what he's doing.
Don't get mad at him.
Come on, Lance.
If U.S. housing prices fell 41%, we'd return to pre-pandemic housing affordability.
Back to the pre-pandemic stuff.
I know you hate it, but there's some value here.
Yeah.
Pre-pandemic, 41% down. That's how if home prices fell down to 41%.
Yeah.
Then you would get the similar affordability we had pre-pandemic.
But that's not going to happen.
Not going to happen. Wages aren't going to go up 69% either.
Nope.
So let's go to option 3, shall we?
Yeah, what's option 3?
If mortgage rates fell more than 4 percentage points, we'd return to pre-pandemic housing affordability. That would be rates of about 3%, kids.
So how many times would the Fed need to cut, even though there's not a direct correlation, right? But there would need to be that'd be some stimulus, and there'd be some positive outlook on the future, meaning the 10-year would have to come down, right?
Yeah.
So I mean, how long until that happens?
You couldn't cut deep enough.
Nope.
Yeah. Keep in mind, rates were at or near zero at Fed funds targets to get to 3% mortgage rates.
Yes.
So you would be completely reversing course entirely in order to get back to that level of affordability. So let's be factual about some things. 3 things I can guarantee you are not going to happen. Number 1, your wages are likely not going to go up 69% unless you did something very, very different than what you're doing today. Number 1. Number 2, U.S. home prices are not likely to fall 41% where you live. Sure, some outliers, maybe, but very uncommon, very improbable. Okay. And you're not going to see the Fed completely cut rates by the entire amount they increase it in the distant future or near future or ever, any future for that matter. A combination of all 3 would be nice. Your wages went up a little bit, your home prices fell a little bit, and mortgage rates fell down a little bit. But that is what I would like to call a perfect storm and improbable at best.
Maybe in 2026. Maybe. I know.
No.
Not good enough for you?
No.
You don't think so?
I think
three rate cuts this year, maybe hopefully 4 or 5 in 2025.
Until I see a cracking and a correction of some type of valuations in the markets, and this is both housing and the stock markets, I don't have a huge degree of confidence in us getting back to pre-pandemic level affordability.
No.
That may be a lost cause, candidly. To be clear, the ifs don't mean that Mr. Lambert thinks that these are possible paths. Instead, it's how far the given metric would have to shift in order to return to housing affordability to its historic norms. And Haroon, if you could be so kind as to give me some chart work. Thank you very much, sir. Exhibit 32, significant adjustments in house prices, mortgage rates, and incomes will be required to return to affordability back to the pre-COVID averages. He talks about U.S., Germany, New Zealand, Canada, the U.K., Australia, Japan, Sweden, and Korea. So certainly not a unique trait to the United States. This is a worldwide problem. Now, I will say at the top of the list of housing prices, 41% U.S. Top of income correction at 69% U.S. Top of mortgage rate correction, 4.3% mortgage rates, the U.S.
Wow.
The next close is Germany at a 36% housing price decrease, a 60% income drop, and a 3.4% mortgage rates drop. And to give you the baseline, Korea at the very bottom here of this same list, you have to have house prices go down 11%, incomes go up 22%, or mortgage rates drop just a single 1%. So we are 4 times worse than them on mortgage rates. We are 3 times worse than them on income, and we are 4 times worse than them on home prices.
And here's the other problem with this. What you might start hearing, because there have been some rumblings that one way to fix this issue is that the 30-year fixed rate mortgage is outdated.
Yeah.
It's, we've had this for too long now, and we can all see that none of this is going to happen. So let's go ahead and increase it to 40 years. So if you stretch out the amount of years, so add on 10 more years, that would significantly drop everyone's mortgage payment, meaning that they can now afford. But what's the problem with that, Chris?
Well, just like the three-point line in the NBA, you can move it closer as people make more shots. And then people start getting really good at making shots.
Yeah.
And then you go, shit, let's move it back to where it was. That was a good idea. They should have just gotten better.
Yeah, exactly.
Just like that, just because you move the average mortgage duration to 40 years does not mean that you're solving for the problem. It means you're just delaying the problem until that becomes unaffordable.
Actually, that'll become an even bigger problem, because I think the average person buys and sells 4 or 5 homes in their lifetime.
I think that's going to change, though.
Yeah, that's going to have to change, right? Like, you're probably going to stick to, it's going to drop down to maybe 2, 3, if that.
That is correct. Do you have anything positive to say tonight?
That's all you. That was all negative. What we got here? Oh, let's go. I'm so excited.
For what?
NBA Finals, baby.
Oh, I'm sorry. I thought you were excited to say more negative stuff during the show.
No. Yeah,
okay.
Negative stuff about the Boston Celtics.
I'm glad you clarified. I don't even know who's playing sports these days. Is that a basketball
Bro,
team?
our headquarters are in Dallas. You got to know.
That Boston Celtics?
Dallas is in the
finals. Mavs are in?
The Mavs are in.
Who's this Caucasian dude?
Oh, get out of here. I hate this guy.
I love this guy.
Let's cap off the conversation with job openings before we go to the basketball stuff, if you don't mind.
Yeah, Odin, can you slide down in here, please, for a little bit? There you go. This from Yahoo. Finance job openings fall to this lowest level since February 2021. Also, not positive news for people looking to buy homes. Job openings fell in April to their lowest level since February 2021, as the labor market shows further signs of cooling off from the hiring boom that followed the U.S. economy reopening after the pandemic. New data from the Bureau of Labor Statistics released Tuesday showed there were 8 million jobs open at the end of April, a decrease from the 8.35 million jobs. So here's the thing. I know this sounds like negative news, okay? But we've said this on the show. Okay. I know we've said a lot of negative things, and I know we've been joking around a lot on the show today about the negative news. But here's the thing. In order for us to get the Fed to do what we would like for them to do, they are going to need to see negative news. That's just a harsh reality.
Yeah, this is one of those instances. Oh, God, I'm going to regret saying this instantly. This is one of those instances where bad news is good news for your future.
Yes. The faster we can get there, right, we're going to need to weather all of these little storms. And hopefully they're little storms, right? But, I'm coming in here if they're all little storms and there's a soft landing, I'm coming here. I'm going to say, you owe Jerome Powell and Neil Kashkari a personal apology.
Nope.
You're going to do it.
I'm not doing
you
it.
are. Yes, you are.
Because it's not going to happen.
Okay, it's not. I don't think it's going to happen either.
Okay.
But my guy, then he would have navigated. You were like, he's too communicative. He's blah, blah, blah. And I'll be like, hey, you owe him an apology. He handled this masterfully.
No.
Why?
There's no world where that happens.
I mean,
Like,
it's happened 3 out of the last 14 times.
okay, stop.
Hopefully it happens.
Okay, there's no
You gotta
way.
hope. You gotta hope that it happens.
No.
What do you mean? No. What do you mean?
I don't hope that it happens. I think a soft landing is bullshit.
What do you mean? You think it's bullshit?
I think you need a correction in values. I think the housing affordability is ridiculous. No soft landing is going to fix that.
Yeah. I mean, what if we could have home prices stay stagnant? I mean, we've never seen that before, right? Stagnant for years on end.
Okay, that's not possible.
No?
No.
Why?
It's just not something that's ever been done before.
Because you think investors are going to take over the market or what?
Values go up or down. They don't stay flat for years and years and years on end.
Yeah.
They just don't.
I mean, in the middle of the country, they do. I mean, it's relative.
Yeah, in the Midwest, it's probably a little more common to be flatter, but generally speaking, they go up or down. Okay? It's like having a semi. It either leads to something or it doesn't.
Like what?
Coitus or non-coitus.
Okay. Well done.
Okay?
Yeah.
Somebody's getting coitus.
Yeah, man. So look,
Haroon's looking at
look.
coitus.
I remember a time when there was 10 million job openings, right? And that came out to, I think, 2 job openings for every 1 unemployed person.
You think we get flagged for the word coitus on YouTube?
See, you're the one that finds a way to get us flagged.
That's not
it's your fault.
I don't
And then
think.
repeats it and repeats it and repeats
Is
it.
in case y'all didn't hear, I said coitus.
Hey, YouTube, you gonna flag me?
I don't think they listen that closely, do they?
They don't got SAT vocabulary over there.
No.
Come on now.
They're looking for all the words that I can't say right now to describe what they say, because then I get flagged. But,
Come on,
you
bro.
know.
They built out an algorithm to figure out the words. That coitus is not in there.
I wonder how close it is. Like if I said "duck you," would that trigger it? Duh.
Now you're just come on. Tell me with him. What do you got for us?
All right, first one. Since Chris has no idea about basketball whatsoever, who you guys got? Mavericks or Celtics?
I got Mavericks in 6.
It's the Boston Celtics, Chris, and the Dallas Mavericks.
And these teams play with the orange
You're
ball
gonna-
here.
You're gonna appreciate this. So I don't know if you know this. You remember Jason Kidd?
Yeah.
He's the head coach of the Dallas Mavericks. So I would really like it for him to win one as a coach. I think that would be really, really
One
cool.
as a player in Dallas, and now as a coach.
Yeah.
No, I think Dallas wins this because I
Yeah?
don't know anybody on the Celtics.
You don't know anybody on the Celtics?
No.
That's Jaylen Brown right there.
Yeah,
Most expensive player in the NBA.
Jaylen Brown is?
Yeah.
Why?
His extension, the way the contracts work now, he was eligible for a big extension. But
Is he
then,
that good?
what about Jason Tatum? You don't know Jason Tatum?
I know who he is. I didn't realize he was on the Celtics. Wasn't he on
Oh.
a different team before?
No, they drafted him and they've.
Uh,
I mean, he was on Duke. Do
did
you remember
he
from
date
Duke?
a Kardashian or something?
No.
Yeah.
He was a big Kobe guy. Yeah. All right, and this one didn't tickle his fancy.
No,
My
it did
fancy is not tickled.
I think
Sorry.
the next one will.
The next one will. Let's go. Ooh, the rise of AI at J.P. Morgan Chase and how Jamie Dimon use a chatbot to prepare for Elon Musk. Do you hear about this? This is from GeekWire.
Okay, he used a chatbot to prepare for Elon Musk.
Did he actually admit to this?
Yeah. So basically, long story short, he
I'm
talks
confused.
about AI and all that stuff, and he just. I thought this was interesting for your guys' industry, especially. He basically says AI bankers and customer service reps will eventually be taken over by AI, basically.
Well, dude,
Okay,
he was.
dude.
Yeah,
First
hold
of
on.
all,
Yeah.
I said this shit in an interview, and a piece of shit blasted me
Mhm.
on LinkedIn, and I was like, bro, first of all, I didn't say this was going to happen tomorrow. I said, this is where the future is going to go.
And he's always known that technology is at something with technology is going to replace a lot of the customer service stuff because they're one of the first early adopters of like these like massive ATMs inside their branches where they just replace their huge teller lines.
Look, and there's a lot of stigma to it, but here's the reality, okay? If I could talk to somebody, imagine this. You could go talk to somebody who could know all of your information instantly, who could know more about your information than you could ever glean from a conversation with an individual. You don't have to deal with explaining your situation to an individual. You say it once, they get it.
Right.
You know, there's no language barrier, there's no articulation, there's no foreign, like, you know, when you call center, like, I understand what you're saying, Mr. Omar. Let me repeat back to you what you said so I sound like I know what you're saying.
I fucking hate that.
It's the fucking worst.
It's the worst.
This is the future. The people want to acknowledge it or not. They're like, oh my God, you want all these jobs to go away. And I'm like, no, dude, I'm just telling you that's people follow the money for jobs. They go offshore because it's cheaper. They're going to go to AI because it's ultimately cheaper.
Yeah, absolutely. I mean, but banking is such an old industry, and there's plenty of other industries out there too that are going to be hesitant to adopt new technology like this because they don't like change.
The banking regulators will step in the way of this. You're not going to be able to take your information and dump it into AI, a generative AI or something to that effect that's not housed in your entire ecosystem. And most banks, I mean, JP Morgan is not most banks, but most banks are not going to have the money to deploy their own AI in an encapsulated way that doesn't have access to the internet. Because the last thing I want to do is give AI your data and have it have access to the internet, and somehow your AI data gets leaked out to the internet.
Yeah.
So there's all sorts of bank regulatory hurdles between now and there.
Yeah, you mean you could easily see that if there can be some kind of glitch on the New York Stock Exchange. Bro,
Whew.
how did Warren Buffett not have a heart attack? Odin, Google this, please.
He's probably so old, he was like, you know what?
No, bro, get out of here. That's instant heart attack. He's jumping out the window. He was prepared to jump out the window.
No, come on. He was probably logically reasoning his way through it.
No. He's probably thinking, I have dementia. I've lost. What did I do wrong?
Or he was getting a cheesburger at McDonald's and had no idea this was even happening.
Yeah. So
You think he's monitoring
there,
his
Odin,
stock price all day long? There's no way.
bro, there's monitoring your stock price, and there's a drop of 99.97%. He was trading at one share.
I'll tell you how rich he is.
One share was trading at over $600,000.
Mm-hmm.
Next thing you know, what is it? $1, dog?
I'll tell you how rich he is. He probably went, that's odd, and then went and saw the trading volume.
There you go.
of the
Look at
day.
this. For nearly 2 hours, Berkshire Hathaway's Class A shares were listed as trading at just $185.
Why are you yelling?
Bro, so am I young?
Yeah.
I was freaked out by this one because when this came up,
You don't own any of it.
no, but
But he tried.
yeah. So this was the real problem. And Chris, you can probably speak to this because I don't know it too well, but I know that there are triggers in place at the stock market to stop trades from happening.
Stop losses, yeah.
Stop losses. So
And that's why he knew there's no way, given the algorithms that are in place, for it to drop that fast, that quickly, and not trigger a stop loss.
because there should have been a stop loss triggered at 20%, which is massive. If he lost 20%, he would have freaked out too.
20% is correction territory, and generally speaking, they halt trading for a period of time, and then they'll restart trading throughout the day to try to prevent just automatic losses. So it was not technically possible to hit that number. So if you're him, you saw this, and you're as rich as he is, you're like, meh, that's not right.
I don't like that the only explanation that we got was it was a glitch. We fixed the issue though.
You know what happened? Roaring Kitty happened. How is a guy who can post a meme and it totally impact GameStop's valuation not getting arrested for SEC fraud?
Because he can't. He's like, if you're gonna arrest me, you're gonna have to go arrest Elon too.
Yeah.
Come on, bro. You don't want that. That's our boy.
GameStop soars after Roaring Kitty reveals a $175 million bet on the retailer.
I mean, how big is this guy's following?
It's huge.
I mean, what are we talking? What platform is he using?
I think he's mainly an X guy.
Is he?
Yeah.
I thought it was a Reddit guy.
Was it Reddit? I don't fucking know.
Are you active on Reddit?
God, his face bothers me.
Yeah, man. And like he's playing to the demographic. He knows what he's doing, dude.
Oh yeah. He wears shirts with cats on it, wears hats backwards. And there's old interviews of him in suits and shit. Like he's completely changed the mirror. Like the whole game over with the red bandana on. I mean, come on, dude. Like, what are we doing here? Yeah, he's on X and YouTube.
Oh, is he? So what did he do? He said that he's betting that much money on GameStop again.
Yeah,
because he was a big part of it the first go around.
Mm-hmm.
Oh man,
everybody like the meme stock guys love him. He's like their messiah.
So what are they trading at now? Can you Google that? GameStop stock? Did it have a correction afterwards?
26.50.
Down 5% today.
I think he's got shorts though, right?
Probably.
I have no idea. I refuse to engage in this.
Look at that.
Jesus. The spike and
all right. What else you got?
This is pure manipulation.
All right. So the conspiracy theories. So Mike Tyson versus Jake Paul fight postponed after ulcer flare up. Did you hear about this?
I didn't hear the reason why. I also heard that his brother apparently has stepped up and said that he will fight him.
All right. So check this out.
Which to me was like weird.
Okay. So here, check this out. This is the conspiracy theory. So there was a lot of footage going around of Jake Paul like sparring, training for this, right? The only footage that had been circling around this entire time, apparently, I got this from The Fighter and the Kid, okay? They were just kind of like flirting with the idea. They didn't come out and they say they believe in it. But the only footage that was circling around about Mike Tyson was him hitting mitts. And that's a very easy thing to do for boxers. Like he'll never lose that ability. That's like you going out or going to the gym, putting some headphones on, taking some jumpers. It looks like you've still been hooping for years, but you can't go out and play the same way. So if you were to actually play a game, it's not the same thing.
That's not true.
So the only footage that had been circulating of him was hitting mitts.
I'm immortal.
Not sparring. Granted, he may not need to spar for a kid like Jake, but you still want to get in the ring a little bit, right? So what if, here's a conspiracy theory. What if it was, hey, Mike, get on the card. We'll pay you X amount of dollars. Let's call it like 10 mil. Get us in the door at Netflix. Have an ulcer flare up. All the promotion and advertising has already been pushed out. They got to still do something. And the ultimate goal for these guys was always the biggest draw was Jake versus Logan. And people are still going to tune in for that. Now they're in the door at Netflix and Mike's stepping out. And I doubt they'll ever actually fight.
Wait, Netflix is broadcasting the fight?
So it's the brothers fighting now?
Now, yeah, Logan stepped in place of Mike Tyson.
Did they confirm that? Is that actually happening now?
No, I mean that's the conspiracy.
Because I saw that Logan offered to fight Jake Paul.
Yeah, that was the offer, and then it's almost like they're like, you know, with the whole I don't know if you were following the whole Drake and Kendrick stuff. A diss track would come out and it was quote unquote leaked, but let's just wait to see what public perception is. And if it's good, yep, that was me. If it's not good, I didn't release that. That's AI.
I do that all the time for the podcast.
What do you do?
Yeah, you know, if it comes out and somebody's like, "Oh my God, Chris, did you say coitus?" And I go, "No, that's AI." I didn't say it. Saied edits the show. Haroon and him work together. I don't understand how half his stuff comes together, to be honest with you.
So I'd be interested.
Wouldn't they be able to market themselves like the brother fight?
You would have never got.
You're never getting into Netflix, bro. What are you saying? Come on.
Without Mike Tyson? Come on, man.
Yeah. Okay. I mean, they had their own like pay-per-view stuff, which did very, very well.
That's like
we're talking
Jordan
Mike Tyson.
If Michael Jordan right now said, "Hey, I'll play one-on-one with Saied Omar," you would tune in just to see Michael Jordan ruin Saied Omar, even though it's just Saied Omar.
Well, think about the PR for Mike Tyson over the last 5-10 years. Like he's become like loved by everybody.
Yeah.
Right. And he's completely transformed from this like evil villain now. And Jake Paul has taken on that role, and he doesn't care. He loves being the villain. Like, you know, hate me or love me, like those same people are going to tune in, right? Everyone would have tuned in to watch Mike Tyson rip this guy's head off.
Oh, let me be honest with you. There is no world where Mike Tyson wouldn't have destroyed. I think right now, even without training, you take one hit from Mike Tyson, you go night-night.
In the ribs, bro.
Yeah, you're night-night.
He doesn't need to hit you in the head.
No.
Yeah.
Dude, he hits you once in the ribs, your head's going to be wide open because you're going to be buckled over. There's no world where that man coming from – first of all, let's be honest, okay? Jake and Logan Paul, they didn't come from the streets like Mike Tyson did.
No. Right.
Okay, they're building a persona. They are actors, good actors, good hype men, fantastic at what they're doing. They didn't come from the streets,
Dude. Even now to this day, I've seen some interviews where he'll be in an interview and he'll be clearly intoxicated or high or whatever, right? And a switch will go off for him, and that he talks about it himself. Like he never wanted when he was on Rogan. He didn't want to get back into the competitive spirit.
Oh yeah,
because he doesn't know how he can't control that beast.
No, he can't do it.
Yeah,
he hits that whatever it is that trigger, and he becomes that man all over again.
Which just made it. He's already come out and said that, right? Even further drives home the point that, man, you're about to get in the ring with some kid, some YouTuber talking shit, and he hasn't like flipped his switch yet. Come on, he had to have known this was
even
real.
then, if you get in the ring with Mike Tyson, let's just say the deal was, hey, Mike, you and I get in the ring, right? You're gonna go down in like 3, right?
Just
4
take
rounds.
a knee, yeah.
Take a knee. Mike may even agree to that. You hit Mike once and he don't like it.
That's it. He might say fuck the deal,
and the switch goes off. He's gonna go, I'm gonna fucking eat your ear.
Yeah, exactly. I want to take both ears this time.
And the only person that's gonna stop me is your death.
Damn.
I mean that's the kind of
I got a little dark, bro.
Dude, he goes, dude, this is the guy who bit Evander Holyfield's ear off.
I know, and then sold gummies.
Sold gummies, ear-shaped gummies. Gave me one on a plane. You look stressed out, man. It's like I am.
Do either of you guys know who Brock Lesnar is?
Yeah.
Of course, yeah.
Yeah, so he does the same shit in wrestling because obviously everything's fake in wrestling, right? But sometimes someone will hit someone on accident. He goes and elbows you in the face. He'll kick you in the stomach.
But he's a real fighter. People forget that.
Bro. Not forget the UFC days.
MMA, hardcore.
Dude, he's an MMA, NFL,
wrestler, bro. A real wrestler. Like I know Kurt Angle was an Olympic gold medalist.
Wasn't he like Greco-Roman or something like that? Like he was like, dude, Brock Lesnar. He's a freak of nature.
Freak athlete. Yep. Yeah, exactly. The neck.
Have you seen his daughter?
No.
Bro, Google Brock Lesnar's daughter. This is gonna trip you out.
Why?
She's a fucking absolute machine.
Did he ever get married to Sable, Haroon? Do you know?
No idea.
There she is. Look at that.
Whoa.
That's his daughter.
Oh my god.
She is an absolute machine. Look at the two of them side by side right there. The third one. There you go. That one.
Wow.
Look at that. That is clearly her father.
Colorado State. Yeah.
And she is a physical specimen just as much as he is.
How cool, man.
Yeah. Sable.
Speaking of daughters, my daughter wanted me to make sure that I brought in her trophy, and I'd be a terrible father if I didn't bring in her trophy. She earned this after completing her first soccer season, something we're very, very proud of. So, Arya, I love you.
Arya, we all love you.
Yeah.
And I'm sorry that your dad let you listen to the podcast. I didn't
she
say
does
coitus.
not listen.
She does not listen.
Thank
but
God.
I am very, very proud of her.
I was like, I'm going to hell now. Jesus.
No, I think she found her sport though, dude.
Soccer?
Yeah, man.
Good for her. Good sport.
At her first game, 6 goals.
6?
6.
How many goals were scored the entire game?
Like 7 or 8.
Oh, wow.
She gets poor thing. She gets tired pretty quickly, so we're gonna have to work on the stamina.
She scored 6 goals.
Yeah.
What do you mean?
That was just that game, and then the rest of the season, I think she scored like 1 goal a game. Sometimes she played more defense, but
Trying to let people feel like she's not dominant.
No, she takes it she was taking it very personal when other teams would score and be like, "Hey, it's okay, just score back."
She's literally the fastest one on the team, but would always get back on defense versus offense. She's like, I don't want anyone to score on us. I'm like, but you're the only scorer.
Yeah, so she was very much like if they were even getting close to the idea of scoring, she would just sprint back to the goal, and she'd be like, "No, I'm not letting anybody score." But yeah,
it's got to be like the Hunger Games in your house.
I'll be honest, man. Like, because I coach Adam's basketball team, right?
Uh-huh.
And I assistant coach of the girls soccer team just so I could be another helping hand, right? Watching her play, just being able to watch her on the sidelines. I don't really understand soccer like that. I've never really a huge fan. I haven't gotten that much joy out of watching the sport. Just like being able to just like take it all in.
So just to be clear, after all the negative shit you said, you think you can end the show on a positive, sweet, good dad note and just get away with it all?
Look, is that
what you're doing?
I'm not trying to get out in front of this. What are you doing?
You're trying to change the narrative in the 11th hour?
No, I'm not.
It's a little Mike Tyson, Logan Paul action right now. Is that what's going on here?
Exactly. I do this.
Haroon, you want to set him straight or should I do it?
All right, go for it.
Oh, Odun, come
He's
on.
my brother-in-law.
Let
man.
Odun set me straight.
Bro,
Let's see what he's made out of. Odun,
I
he's
got
not-
nothing.
Odun's,
I got
Odun,
nothing.
Odun is Mr. Unnecessary.
Yeah, but he's not unnecessary on call. He has to pop in and like.
No, what do
Yeah.
you mean? He is. He's taming himself right now. There's a lot of shit going on in the head. He's just like, I
Yeah,
can't
but
say
he doesn't drop bombs on request. Like he doesn't like like he's gonna come in when you're not looking.
Yeah.
He's the sniper in the fucking fields far away that you don't see shooting, and
Yeah.
then he'll just come in and be like, "Why are you fat, Saied?"
Damn. Going with the oversized shirt today, huh?
Yes. Yeah. That shirt didn't shrink, did it?
No.
Then something got bigger.
Yeah.
All right, Arun, you got anything else for us?
Hey, people, we need some reviews. We haven't had a review in over a month or two.
I know it's been a little stale on the review side.
Yeah. Only
We had the one in Canada, but we can't see the whole thing.
only the Canadians.
Shout out to the Canadians.
We love
I know,
them.
I know we have listeners. We have
We
listeners.
probably don't actually. We're doing this for us now.
Just the
Yeah,
OG
that's
5
true.
listeners.
Yeah.
You got anything else?
No, I'm good. I feel chipper and upbeat after talking to you for an hour.
Feels good. I love you, man. I love you too, Odun.
This guy.
Dude, this is
I'm
not.
trying to leave on a good note.
Yeah, it
Yeah,
doesn't do that,
come on,
dude.
put a
It's
nice
so
little
just say fuck the
non-believable.
wall.
Hey,
Yeah.
new homes are coming down. Go out and buy a new home.
Time to buy. It's always a good time to buy.
All right, everybody. Good night, everybody. Don't do it. Please don't do it. I'm asking you.
Okay, bye.
Yes.